There are some really important things that traders just keep seeming to ignore in this market, so strap yourself in because this is going to be one of my more controversial videos, but that's why you're here. That's why you watch this YouTube channel. Super excited for this. Do me a favor and smash up likes, because what I want to talk to you about today is this situation with Bitcoin right here. You see, Bitcoin has managed to, again, pump above $24,000 and, again, come right back down. And it looks like, we could be looking to move at least a little bit lower before potentially continuing our trend up. I want to talk about this in a lot of detail in today's video, and the first thing that I must get out of the way before we get into the meat and potatoes of this video is very simply just that I don't think we're doing anything particularly bad right now. You see, if you've been watching this channel for a while, you're going to know quite well that I haven't actually been worried about this trend throughout this entire region right here over these last 2 to 3 weeks. I really have not been very concerned, and primarily the reason for that is because we have a lot of support below us, right? I've already demonstrated this to you on many different charts, but you know what? I'm going to go ahead and just start removing my drawings here now because we don't really need all of these. And what I want to focus your attention on is just things like, for example, this 4-hour Ichimoku cloud. You guys know that I love this indicator. Momentum support as well, which is right here. Daily momentum support as well, which we're now potentially, we're getting some really nice flips turning bullish. People are losing faith pretty quickly. They're gaining faith pretty quickly. The fear and greed index that I was mentioning I wanted to see update did manage to update, but it updated right after we dumped back below $24,000, and so we are just at basically the same reading as yesterday, which is good. Not great, but good. And I think that there's still a lot of good stuff going for this market. And that's important because before I get into all this bearish stuff that I want to discuss with you, we need to be viewing this, with a complete lens. What I don't want you to do is just zoom in on everything that's negative or just zoom in on everything that's positive, because then you'd lose your money. Then you wouldn't really be a very sensible, or I would say responsible, technical analyst / trader. So here's the thing, guys. This market loves to produce what's called deviations here. And really what this is what I'm going to do is actually zoom in onto the 1 hour time frame. And I just want to very simply define one range right here that you guys are going to be very, very sourly familiar with. It's going to be this 24.2 range stretching down to about 22.7. If we trace these two lines back all the way to 2020, what we're going to see is that this is exactly the consolidation range that Bitcoin was in when we initially broke above $20,000 for the first time. Again, we just replay this chart, take a look at this on a smaller time frame. This is exactly where Bitcoin was consolidating between. So it's actually very, very poetic that we have the same range acting on the market right now. And if you've been paying attention, what you're going to realize is that, we'll have these ranges, but we will deviate out of them sometimes, right? So I just want to focus your attention on everything that happens from this line onwards up until where we are right now. And what we've had several times right here is the market will punch above and then come back down. It'll punch below and then come back up, and we have now done this to the upside again, which puts us back in this range. Now that's something which people psychologically probably just aren't really prepared to entertain, because it's fucking horrible. It's really not nice being stuck in ranges like this, but unfortunately that's the reality that we're dealing with. And before I carry on, I want to give credit to a figure on Twitter, I believe. His username is something like this, Trader1SZ, something like that. Unfortunately, I think he's from Birmingham, bless him, but he is a very, very good technical analyst, and he is actually one of the key people I've been watching. You guys know the deal. I am still a student of the market, always have been, always will be. The moment I stop being a student of the market is the moment that you guys should unfollow me and go watch someone more humble, because you always have to be learning from people. And this guy on Twitter, I don't know his exact username. Let me see if I can pull it up, because I do want to give him credit. He is very, very good. Yeah, so it is Trader1SZ right here. Very, very good analyst, and he likes to talk about deviations quite a bit. In fact, it's right here that he pointed out the exact same thing that I've just shown you guys a minute ago. And this is very important, because what it means is that we are placing ourselves now back in this range which potentially means that, I mean, we are indefinitely trading here until either the bulls make a win or the bears make a win, right? And so each of these deviations, they don't necessarily have to be deviations. I mean, you could call these liquidity grabs because, you know, obviously a lot of people might have their short positions here. So you punch a little bit above it, you stop those short positions out, and then you move back down. A lot of people might have their long positions here. So you punch a little bit below that, you stop those long positions out, and then you move up, right? That's one potential explanation. But honestly, guys, I don't like to take this extreme market manipulation approach to the markets. You know, honestly, I think that these markets are not as evil as you think they are if you're in that camp. You know, I think this was a genuine attempt at breaking up, but we just didn't have that energy. We just didn't have enough bullish energy. The bears had a little bit too much energy, and they were able to regain control, and that puts us back in this equilibrium, right? This is an equilibrium because, you know, we are in a situation where the bulls aren't winning and the bears aren't winning. So that's important. That puts us back in this sideways range. And again, just keeping in line with what I said at the beginning of this video, I'm just not too worried about this, ladies and gents. We're still at a decent price level. You know, we're moving up very nicely, very, very nicely. If we look at this low and take a look at where we are now, we're now 54 days ahead and we're up by 35%. Ladies and gents, this is so healthy. Now, obviously, it doesn't mean that we can't drop back down, and I'm going to talk about that in just a second, because these liquidity grabs that these markets are seeing are sometimes quite big, quite, you know, disastrous for this market, and I fully think that we might be looking at something like this again, which I will talk about in just a second. But this is an important thing to keep in mind, is that we are now back in this range that we're actually pretty comfortable with. So with that in mind, I'm not too worried about this. You know, if we are able to come back down, we look at this chart right here. If we are able to come back down into this kind of support range, capture a little bit of support here and then move up, it's fine. It's fine by me. You know, the fact is we're still consolidating at these resistance levels. We're still punching in higher highs. It's okay. It's really not that bad as far as I'm concerned. You know, where do we start to invalidate this? You know, we would invalidate this if we start punching in lower lows. You know, if we take a look at the lows that this market has been setting, you know, take a look at the lows right here. They have, on the whole, been getting higher, right? Our lows have been getting higher. You know, I don't think it's fair to call this a low yet, but quite simply, if we fall below this low right here, that means we are now no longer setting higher lows, which would put at least a temporary, if not a definite end to our short-term, mid-term uptrend that we're in right now, which is obviously quite important, because if we start losing these kind of levels, then, you know, we might also start setting lower highs, right? If you take a look at the highs that this market has been setting, bam, look at this, just gradually getting higher and higher, not substantially, and that is something I'm going to get to in just a second. So smash up the likes if you're enjoying this video so far and finding it useful. I really do appreciate all your support, and just double check that you are subscribed as well. This is very time sensitive content. You want to get that bell ticked as well, because the sooner you get to see these videos, the more relevant they're going to be, therefore the more helpful to you, and of course it helps the channel out as well, so it's positive for everybody. But right here, this is something I'm going to be talking about with these higher highs. The thing is, if we do start swinging below these lows, well, then we might start to set lower highs as well, which could put us back in a downtrend. And that is something that, you know, I really don't want to see, but unfortunately it could be on the cards. And actually, the next thing that I want to just bring to your attention right here is this higher highs situation, right? If we take a look at what this market has been producing, you're going to see that on the whole, we're kind of forming, you know, a kind of rising wedge pattern that looks something a little bit like this. And there's a lot of different ways we can draw this, right? It doesn't really matter how you've drawn this in particular. I know other YouTubers are drawing this in different ways. It really doesn't matter. It represents the same thing, which is pretty much just that we are in a downtrend, and we are now, you know, relatively slowly rising up. I mean, if we take a look at how quickly we dropped down, this was a minus 43% move in 12 days. And on this side now, 55 days ahead, we haven't even produced a similar percentage move to the upside, which is basically to say we're moving down very quickly and reacting up very slowly. It's a very typical bearish pattern that this market loves to produce, and we have seen it many times in this market so far. We've seen it in all sorts of different shapes and sizes. I've already spoken to you guys about this many times, but the fact that this has now matured and carried on means that we can now potentially be talking about this with a little bit more confidence, that we might actually be doing the same thing again. So very common pattern for the market. There's so many more of these. I've already pointed them out. It works to the downside as well, right? When we form these patterns trending down, it actually tends to be quite a bullish thing for the market. I've already shown you this many times. We've been talking about this since the beginning. If you have been subscribed, you're going to know all about this. None of this analysis should be taking you by surprise. But the fact of the matter is, we are now producing a pattern that we have dumped out of basically 2 times in a row, at least 2 times, depending on how generous you want to be. You can count these kind of situations as well. And we are now potentially on number 3. And the thing is that these patterns, they do take some time to develop from the beginning to when they break out. This was 83 days. This one was obviously a lot faster. It was only about a month. And this time we're about halfway between the two. This was nearly 3 months. This was 1 month. And we're now at about 2 months on this one right here, right? So, this absolutely could end up breaking down. And the thing is, if we do end up breaking down, one of the easy ways to kind of take a look at how low you might fall is just kind of taking a flagpole like this and then giving ourselves a target of about $9,000 if we end up breaking down. This is extreme doomsday stuff. I don't want to talk about this yet. Honestly, I don't think it's sensible to talk about those kind of price targets yet, especially for my kind of trading. I mean, if you're super long term, then you probably wouldn't even be watching this channel. But if you're more of a slightly more active trader like I am, those things just aren't important, because we already know, ladies and gents, if the market goes down, we're going to be making money. If the market goes up, we're going to be making money. That's just how we do it. That's why I like to be a trader in the style that I am. I'm obviously not a day trader because I'm not fucking crazy, but I'm also not a swing trader. I'm a little bit more active than that, and that's why these are the kind of questions that I'm interested in. I just want to identify the high probability moves that might be coming up in the short term, and then if I'm confident enough in them, I want to put some cash in that direction, leverage it up, and make some money. So that is always the objective. And so, we take a look at these highs, and just moving back to this higher highs discussion right here, the thing is like I said, these highs are not getting substantially higher in this market right now, which is definitely a point of concern. The thing is each time we punch in these higher highs, what we're doing is also showing that we are potentially losing a little bit of momentum. Take a look at this right here. If we look at the RSI, I know I don't look at the RSI often, but I think that this is going to be useful just now in this market. You can start to get an idea here of, you take a look at where the market is going. Let's just remove all of these lines again. And all I want to do is just draw one line that kind of traces. Let me see how to do this right. Let's move on to the 4-hour time frame. One line right here that traces the highs, and another line that traces the highs of the RSI. And you can kind of start to see the RSI is kind of trending lower. If you're being very generous, you can say it's staying level, but I think it's fair to say that the RSI is trending lower, while at the very same time our highs are getting higher, right? So we have got this beginning of a bearish divergence, and I don't like to analyze based off these kind of bearish divergences because they're just so unreliable. But the thing is that's important to keep in mind, and this is where my analysis is going to be slightly different to other people, is that obviously I'm not going to be basing my analysis off things that I deem to be weak. It's easy to understand divergences, which is why people use them, but well, I would argue that they don't understand them very well. The thing that I like to use these divergences for is simply to tell me a little bit of background information on the market. It's to confirm things that I already suspect. You see, if we are, slowly moving up and not really able to punch in substantially higher highs, well, I mean, to me, that's quite reminiscent of when we were setting our all-time highs, right? If we move on actually to the daily chart, take a look at this, guys. In summer of 2021, look, we weren't able to punch in substantially higher all-time highs. Let's see what happened with the RSI. Look at that. Very, very clear bearish divergence right there. No surprises whatsoever. We trace this line here. We trace this line here. It's a far more obvious bearish divergence in this situation right here, showing us that while the market is moving up, our relative strength is not moving up. Guys, RSI means relative strength index. It doesn't mean sell at the top and buy at the bottom. It's just not a good idea. But it does tell us something about the relative strength of the market. And relatively speaking, the market was losing strength at these times right here. And it was the very same picture right here. Look, we punched in a slightly higher high for this all-time high right here. RSI dropping like a stone. So these are potential indications of the market. Just, we can tell this by eyeballing it. It looks like it. It looks like it. If you look at this uptrend right here, if you kind of compare the price action that was happening right here, and then you compare the price action that was happening right here, it's very clear to see that we were more aggressive here, less aggressive here. You don't need the RSI to tell you this, but if you're new to the market, you're not quite as experienced, you're not able to see these things just by eyeballing it, then the RSI can help you there. it's what I would call a supplementary piece of analysis. I like to do my core analysis using very simple, very, very fundamental tools and strategies because they work. And I like to supplement with, tools like this just to give me that extra boost of confidence. And guys, bringing it back to the market right now, we're in exactly the same situation. I mean, after what I've just shown you, hopefully you're seeing this with a fresh pair of eyes. This is not good. This is not a good sign for what I'm seeing right now, just in terms of these potential higher highs, us losing momentum and so on. I'm not quite liking what I'm seeing here, and that potentially is setting us up for dropping lower to grab some liquidity in these lower areas. Because guys, the other thing that I keep talking about are these long and shorts in these markets. Now, we are seeing this move quite a lot more to the short side. Binance still majority long for retail traders. Bybit now actually majority short for, this doesn't happen often over these last few months, so this is quite significant. And FTX even more so, majority short. So people are turning markedly more bearish right now, which is interesting to see. It doesn't mean that we're immediately going to be, flying up and doing the opposite of what this shows us. But again, what I want to do is build a picture. I want to build a case to tell myself that there is a certain, there's these pieces of evidence that tell me that the market might be ready to rise up. There's these pieces that tell me that the market might be ready to drop down. Let me weigh them against each other and build a conclusion. It's not something that you just do by, one of the things that really annoys me, guys, is when people talk with definites in this market. They're like, next week we're dropping down. Like, shut the fuck up. You have no idea what you're talking about. This is all about probabilities. Nobody knows what's going on. This is all about balancing probabilities, looking at what's likely to happen, what's not likely to happen, and then being cautious about your speech. When people talk in definites and trading, guys, do me a favor, hit them with the big block button. I have no patience for it. You shouldn't either. If you're on this YouTube channel, we're trying to be realistic here. We're trying to be genuine, responsible, sensible traders, and there's absolutely no space for speaking in definites, for people like that. It's all about, balancing probabilities and then putting money behind those probabilities when you're ready and confident in them. So I think that's really, really important. Now, what does this mean in terms of grabbing liquidity if we do end up dropping lower? Well, it's about, I think, identifying where these stop losses might be. If a lot of people are long right now, where are they going to be placing their stop losses? One of the most obvious places, in my opinion, is going to be, kind of anywhere below $20,000. I quite like this area of support, to be honest. This is at 21.7. I think anywhere below here is amazing to grab liquidity. I don't want to see Bitcoin dropping down here. It's not going to be fun for me. It's not going to be fun for you. But it doesn't really matter. These markets do not move based off what we want. They move based off right now where liquidity is, because the markets are more dry than they were back, of course, in 2021. And of course, that makes this a trading range, which, if you're not aware of these things, you can really, really get screwed over. So anywhere kind of below 21.7, I think works. I know a lot of other people that I respect are saying kind of below $20,000 is where we could grab some liquidity. But honestly, I think this is far too low. I think that if Bitcoin drops anywhere down to these kind of levels, I just can't see it recovering back up. We very well could. It could turn into a really long-term, kind of accumulation range that looks something like this going into the end of 2022. My God, that would be absolutely horrible to live through. I don't think that that's what we're looking at, just because it would be far too low. But I know that a lot of other people are looking at that. And of course, if that did happen, there would be a lot of trading opportunities just in that kind of market. It's actually one of the safest opportunities to be a trader. And by the way, guys, on that note, you already know the deal. Almost every trade that I'm making, I'm doing it on Bybit. I've been doing this for years. And so if you want to check them out, you're getting over $4,000, more than this actually, if you follow my link in the description to sign up to Bybit. This is the main exchange that I trust with my trading activities. And all you got to do is head on over to the description. It's also always going to be, it's not in this video, but it's also always going to be the top comment in my videos. You get over $4,000 by signing up to the main exchange that I trust with my trading activities. Follow this link. It is a page that shows you how to get over $4,000 by registering with Bybit today. You can do this if you already have an account as well. And this video is 2.5 minutes showing you exactly how to claim those bonuses. Very, very cool indeed. So definitely check this out if you like the idea of getting some free money. And if you want to be able to watch me trading in real time, then bam, these are the steps on screen as well right here. Moving back to the analysis though, the other key thing that I'd just like to highlight to you guys is that if we do drop down, like I said, towards 21.7, anywhere kind of down to this level and slightly above, I think we're completely fine. We are going to start losing bullish indicators that are helping us right now. For example, the 4-hour 𝗙𝗎𝗥𝗙𝗚𝗓, we're going to lose this if we drop below 22.7. The daily EMA ribbon is basically already gone. If we take a look at this right here, we don't really have, actually it's about the same level, 22.9. Anywhere below that, we're not really going to have this helping us either. So I think this is a situation where bulls and bears both have a pretty good chance of taking the market in whichever direction they want to take it in. But for now, with all of these things in mind, the key thing that I just want to rest my case on is that we are still in a support level. We have still had a breakout. I don't know if I'd call this a successful breakout, but it was a 4.8% move up, and you can't act like that's nothing. That still beats our 1% rule. That still beats our 3% rule, and we are now potentially just falling back down to capture a little bit of support. If we start to see, for example, Binance with retail, starting to become a little bit more short heavy, that would give me a lot more confidence. But other exchanges like Bybit and FTX already become leaning a lot more short, I think is quite an important sign, showing us that we potentially are shifting that momentum, getting ready to, maybe get some stop hunts to the upside and so on. So those are the kind of things that I am going to be potentially looking at. So there you go, guys. I really hope you have enjoyed this video. You know what to do. If you have, hit up the likes, subscribe, tick the bell, do all that good stuff. Bybit on screen right here. If you want to get over $4,000 for free, it's totally free. There's no catch. This is what I use myself. And they are doing this purely because exchanges are very, very competitive in this space. They make a lot of money from you when you pay your trading fees and from your data, and that's why they're able to offer so much money. So guys, they're getting your data no matter what you do. At least get some free money out of them as well by following this link right here on screen if you're interested, and VIP right here as well. You guys know what to do though. Like I said, like, subscribe, tick the bell, and I'll see you all in the next one. Bye bye.